Good afternoon, everyone. In the interest of time, we will go ahead and begin the webinar today. Thank you so much for joining us today, and it's wonderful to finally be back sharing the Hong Kong market with everyone. I see a few familiar names as well as plenty of new names. A very warm welcome to you on behalf of Phillip Securities. It's very nice to have you all here today. Now, today we will be going through the navigation of the Hong Kong market landscape. As you know, this year has been a wild year for both US, Hong Kong markets, and we would just like to touch on some of the latest developments that we have been going through. Today, I have with me Rubin. He's one of the newer members on our team. He will be going through with you the overview of the Hong Kong market landscape first, followed by the overview of the Chinese economics and the latest developments that have been taking place, including stamp duty changes. This should be quite interesting as it's an attempt to boost the trading in the Hong Kong markets. After that, he will go through stocks or ETFs, direct investments versus ETFs, some of the advantages that everyone should know of. And afterwards, an introduction to some of the ETFs in Hong Kong. Following which, he will pass the time back to me and I will be holding a technical analysis session. For a start, we will go through some of the counters that are more heavily weighted and some of the ETFs that Rubin will go through. And afterwards, if we have some extra time left over, I would like to take some comments from everyone from the Q&A section. You can find it at the bottom of your screen. Some counters that you have been interested in, and I'll quickly go through them. Depending on how much time we have left, I'll try and go through as much as possible. So it will be a little bit basic, but I would like to go through as many of the counters suggested as possible. So now, without further ado, let me pass the time over to Rubin. Rubin, off to you.
Okay, thank you, Darrin. Hi, good afternoon, everyone. So my name is Rubin. Thanks for joining the webinar today. And I will share you some ideas about the Chinese economy and some of the information about the ETF with different strategies for investing in Hong Kong market. So first thing first, let's have an idea about the dominating sector and company of the Hang Seng Index. The highest rated sector is financial, which is similar to other markets, rating at 34% of the total index. The second is the information technology, which account for 28.5%, and the consumer discretionary, which comes in third, standing at 9.8%. Now, let's look at the constituent weight in the Hang Seng Index. We see that all those companies in the top ranking are familiar names, such as HSBC, Alibaba, Tencent, AIA, China Construction Bank, and others. Even if you've never invested in Hong Kong market before, these names are sure to ring a bell to you. Okay, so let's move on to the individual sector. The Hang Seng Index is in blue color line, which is lower compared to last year due to several factors such as the global inflation, a weaker than expected economic recovery, and also the debt default of the Hong Kong property companies. Next, in the green color line is a Hang Seng Tech Index. It has significantly outperformed other indices due to the technology sector bull run in 2021. However, it has returned to the normal level due to the quantity tightening deployed by the growth markets. We see that the same logic can be also applied to the consumer discretionary sector, which is also in the purple color line. The property sector is the only sector that underperformed, dragged down by the debt default crisis by the Evergrande and also the Country Garden. Before you investing in the Hong Kong stock market, people will also look at the Chinese economy and also its financial environment. As more of the Chinese company like the Tencent, Alibaba, Meituan, the China Construction Bank are all listed in Hong Kong. Hence, more of the policy deployed by the Chinese government will actually affect those Hong Kong listed Chinese companies. We can also see that the correlation in the past year between the Hang Seng Index and the SSE Composite Index is around 73%, which means that today the Hong Kong market goes up 1%, the SSI Composite Index will go up 0.73%, indicating a very high correlation. The overview of the Chinese economy that will be shared in the next page can provide you a broader insight for investing in the Hong Kong market. Now, let's move on to the Chinese economy. The China October CPI was down 0.2% year-on-year, mainly driven by an expanded decline in the food prices. The crude prices decreased by 4% in October, expanding the decline by 0.8% in September, and contributing to a total 0.75% decrease in the October CPI. Fearing that the inflation will happen due to the decreases consumer spending, and many people will assume that the price in the future will be lower than today. Therefore, people opting to save more rather than spend, and it will contributing to a worsening economic recovery. But according to the study from the National Bureau of Statistics, the fall in the food price is attributed to the favorable weather conditions, abundant agricultural supply, and the reduced post-holiday consumption demand. So we think that the core inflation rate could provide a more accurate insight into the Chinese economy. In October, the core CPI excluding the food and energy prices rose out by 0.6% year-on-year basis, remaining unchanged from the last month. Okay, the next one. Okay, let's talk about the China retail sales, which were up 7.6% year-on-year in October, higher than the September's 5.5%. This was mainly driven by the ongoing consumer-focused policies, seasonal boost from the National Day holiday travel, and also the contribution of the Double 11 online shopping festival pre-sales. Although the nationwide the unemployment rate was up 5% year-on-year basis, maintaining the same level as the last month. We see that the unemployment rate is lower than 2022 and is now already back to the pre-COVID levels. The unemployment rate can be a delayed indicator showing that the people has a stable job and the payroll so that they can spend more in the future. Besides, the total value added of the industrial enterprise above the designated size were up 4.6% in October, indicating an industry sector recovery from the pandemic. However, the national fixed asset investment from the January until October was up only 2.9%, less than the last month 3.1%, because it was dragged down by the negative 9.3% by investment in the real estate development. So, in the conclusion, the overall economic performance and the key indicators show a sustained trend of the economic recovery. The economy is continuing to move in a positive direction, and the demand for the goods and services is consistently rebounding. Additionally, both money supply is experiencing a sustained and a rapid increase also. All in all, it is estimated that the low-level price operation observed in the previous period will gradually ease in the upcoming phase. There is no indication of the deflation in the coming 2024. However, investors should also be aware that the existing external pressure remains substantial, and the constraint of the insufficient domestic demand is still prominent. There are several policies deployed by the Hong Kong and Chinese government on the different aspects. So let's look into it. The first one that we see that starting from the November 17, the Hong Kong Exchange has lowered its stamp duty fees from 0.13% to 0.1%. The purpose is to boost out the Hong Kong stock market trading volume since the average daily turnover has dropped 15% and 36% compared to 2022 and 2021. For the property side, the buyer's stamp duty for the for the property side, the buyer's stamp duty for the non-permanent resident and the additional properties purchased by the resident will be halved to 7.5%. The policy is used to stimulate and overcome the weaknesses of the Hong Kong property market. Lastly, the lending benchmark rate in China remained at the same level. For the one-year LPR used for the new and outstanding loan, it remained at 3.45%, while the 5-year LPR used for the mortgage remained at 4.2%. Both rates are kept at a low level, and it could stimulate the national credit demand. Okay, so if you would like to invest in the Hong Kong market, you can choose to buy the stock directly or buy in the ETFs. It depends on what kind of investor you are, and different products serve different purpose in the portfolio. And so let's talk about the pros and cons of both. Firstly, most of us were exposed to the direct stock investing early in our journey, and if your analysis and the prediction are correct, it can allow you for the potential higher return than investing in ETF. Sorry, so invest directly in stock can also allow you to have more control over your portfolio. But however, there are two main issues with this. The first one is it could reduce your portfolio diversification. If you hold a number of shares, especially if you are concentrated in a specific sector, then you may reducing the diversification of your portfolio. The next one is the company risk. Okay, you imagine suppose today you invested in the one company and the company suddenly change its board of director or it get acquired or delisted. So of course your entire investment will get affected directly. So this is the company risk, and you only face this issue when you own the stock directly. Now, what about the ETF? The main feature of the ETF is diversification. If you invest in an ETF, it usually means you are getting exposed to many securities, sometimes even hundreds of counter in the fund, like a basket of different teams. This is instant diversification. Besides, most of the ETFs are tracking off different indices, and many investors are happy with the index return. And ETF fees in general are also lower than the active fund manager fees. And also, same as a single stock, you can sell your ETF in the market anytime you want during the trading hour. However, the ETF are generally true to be the passive investing. And ETF are aimed to provide a similar return to the underlying, but not aiming to outperform the index they are tracking. The next one. So now I will show you a table to see the top trading ETF in the Hong Kong exchange. And we see that all of these ETFs are tracking broader indices such as the Hang Seng Index, the Hang Seng Tech Index, and others. The purpose is to ensure that you can diversify your portfolio and minimize the company risk. And I will introduce some ETF with different strategy on the next page. Okay, so we come to the next one is the first one I would like to introduce is the 2800.HK, the tracker fund of Hong Kong, which included the largest company of the Hong Kong stock market, such as the HSBC, Tencent, Alibaba. It's at a lower expense ratio and the high liquidity. So if you have confidence in the Hong Kong stock market, this ETF could be the best try for you. The second one is the 3033.HK, the CSOP Hang Seng Tech Index ETF. The underlying index represents the 30 largest technology companies listed in Hong Kong. The top three counters are the Xiaomi, Li Auto, and Tencent. It's an outperformer the Hang Seng Tech Index due to the technology sector bull run in the last few months. So if you are an investor who focus on the company growth rather than the dividend yield, then this ETF is suitable for you. As we know that the tech company is seldom to pay out their dividend. The third one is the 2828.HK, is a Hang Seng China Enterprise Index ETF. The underlying is a Hang Seng China Enterprise Index, focused on those mainland company but listed in Hong Kong Exchange. So this ETF will be more suitable for those investors who is bullish on the China mainland company and also its economy. The last one is a Global X Hang Seng High Dividend Yield in ETF, which is tracking the Hang Seng High Dividend Yield Index. This ETF is good for those investors who are looking for the high dividend yield. As you can see that the 8.23% dividend yield is the highest among those ETF I have introduced so far. Okay, so that's all for my presentation, and I will pass back to Darrin. Hi, Darrin.
Hi, thank you, Rubin, for the presentation. Now, before we move on to the technical analysis, I would just like to take a quick short break, okay, by showing you one, give me a moment here. Let's see. Okay, now I'm sure as many of our clients will already know, we have a new app, And I say it's a new app, but it's actually been out for more than a year now. But it's a new and improved version of our app, new with all new kind of activities like if you log in, you get a certain amount of coins, you can replace it, you can redeem those coins for like Hong Kong live prices, you can get a plushie, you can get rewards. It's like a brand new rewards program that you can utilize just by interacting with the app, interacting with our other members on the app. We have various different communities like US earnings, we have dividend. The one that I'm in charge of is actually the dividend community investing. We post regularly infographics, we post latest markets updates. We also gather all the like-minded investors and we discuss ideas. If that sounds like your thing, you can actually scan to download the Bonus Mobile Tree app now. It's completely free. You basically are able to access most of all the incredible things that we are now currently offering on Bonus Mobile Tree, including access to all our different communities and all the rewards. But of course, if you would like to fully enjoy the app, we always encourage our potential clients per se to open a Bonus account now. Later on, I'll show you how. It's actually very simple. It's like 3 steps only, and you get to enjoy the full Bonus Mobile Tree app. Okay, which includes, of course, our some of our more interesting products such as our US Asian hours where you get to trade the US markets from 9 a.m. If all this sounds like your thing, you can just scan to download the Bonus Mobile Tree app now. And if let's say communities are your thing, but maybe you want another way that you can get in touch with us, or another way to receive, like for example, US market data. So you can scan this code, it will go directly to our Telegram channel managed by the Global Markets Desk. That's my department. Regularly in the morning, our night desk, our US market team will post the latest US markets news every day without fail. And sometimes we even have many different promotions and activities that we host that is particularly exclusive to our Telegram channels only. We have many other Telegram channels that we can go through. I will also recommend checking our Telegram. I will link it later on after the webinar. I will probably link the rest of the other Telegram channels. You can go and explore. There's a ton of information and a ton of information sharing, all for free at your fingertips from your mobile devices. So I highly recommend. Okay, now that we've established that, let's go through the technical analysis. Now, before we go on to the live session, I would like to go through some of the larger weightage counters and ETFs first. So I'll try and make this quick so we got a little bit more time for the suggestions later on. I'm sure many of us here, like some of the familiar names I know, you have your own that you want some basic technical analysis done for. Okay, we're here for that. And okay, so I'll stop delaying and we'll just dive right into it. Okay, the first one will be, okay, one moment. Okay, the first one will be HSBC. Rubin can see my screen, right?
Yeah.
Okay, wonderful. Okay, let me just full screen this for you. Okay, the first one is HSBC. Let's look at the higher time frame first. Okay, I'll annotate as I go. Okay, if let's say I'm going too fast or anything, please put it in the chat. I can slow down, I can speed up. It all depends on what you want. Okay, so we're looking at a rebound. Okay, for HSBC holdings. Okay, our larger range spans from. Let me close this. Our larger range spans from about 28.45 all the way up until currently about 66.70. Okay, so this is the big range, the daily range that we're seeing. Okay, if we look previously, price came up here, okay, broke previous levels, came down, retested the demand zone, and price broke back up once more, came back down, failed to break this demand zone. So we know this is a pretty strong level at about 39-ish to about 40.55. We know that this is a strong support level from the chart. Okay, and then price broke up. Okay, form a double top, almost a double top. Okay, came back down, and then finally broke up to what is our now the highest point in our range. That would be 66.85. So now let's zoom in on what has been going on. Let's go down to the 4 hours so we can see more structures. Okay, so we've already established earlier that we have a demand zone. Okay, this demand zone being where the buying pressure had increased so that prices could break the previous levels. So in I will be referencing demand and supply zones a lot later on as well. So from about 49.75 to 52, quite a little bit big. Okay, so currently what we're looking at is price hit a high. Okay, price came down, formed a double bottom, came up, failed to retest the high, came back down, and it broke the previous low. Okay, so we're on a little bit of a short-term downtrend. So what I would currently be looking at now is, because now I know that I form a new low and I form a new high, probably would not be looking for an entry. What I would be looking for, or at least on the 4-hour level, would be for prices to come down at least to retest about 52 to 53, 54 area first. So I will be looking for some structure that goes like this. Okay, so sorry, that was a poor drawing. Let me just do that again. Okay, price to come down, make a new low, came up, make a lower high, continuously come down, and continue this structure. So this is what I would be expecting if I wanted to take a position in HSBC, because that will give me a better optimal position. Supposing that this demand zone holds, okay, where prices come down and it maintains in this zone or slightly above it, okay. If it doesn't manage to break through this demand zone, then I know, okay, we're going to return to the higher stages and probably test this level over here. So that will give me a significantly better risk to reward ratio at at current prices of what we know of, about maybe 1 is to 2.15. So every dollar will get you $2.15, so to speak. Okay. Okay. So I don't want to spend too long on HSBC. Let's move on to the next one. Alibaba. Okay. So that is 9988. Okay. Alibaba. Let's see. So I drew this a while ago, so and I'm quite happy with how it turned out. Okay, so I drew this some months ago actually. So let's see, maybe about a month ago actually. So we have our range from 60.35 all the way until about 118. Pretty big range, but very normal for counters like that that move a lot. Okay, so what happened here? Price came up, formed our high. Price came back down, broke, came back up, lower high, came back down, lower low, came back up, okay, failed to break but retested the supply zone, and now we are back here. So if you remember from the HSBC, this is roughly the structure that we would like to look at if we were bullish on this. So removing all my drawings. If you see this white box here, okay, so the reason I drew this as a level is because if you look closer, price actually came up and retested this area once already, but failed, and then it formed a lower high. Okay, so I was wary about this position, but then of course prices came down and it's now here at the demand zone. Okay, so now if you look at the charts, if prices manage to maintain at or stay above this level, then I will be looking for a rebound at least to test the level of about 92.65, so 91 to 94. Okay, so now if we go all the way in, and let's switch to the 4-hour chart. Okay, we can see that prices has already come down and is starting to form a higher low. On a lower time frame structure, this is a higher low. So this is my indication of a rebound. Okay, this is the higher low here, this is the test. Okay, so if you were bullish on Alibaba, okay, and were thinking that, oh, if you agree with me and this is what I'm seeing as well, okay, or this is what you're seeing as well, then putting your let's say you cut your losses rather than hold long term, this is you would be looking at something about 1:3 for your risk to reward ratio. Not too bad, actually, pretty good. Okay, but one thing to take note of is that it's still a downside and we have no confirmation. Okay, that there never really is 100% confirmation. But from the chart now, there isn't a full confirmation yet that prices is not coming back down to retest and eventually break through. So this is the risk that you take with this trade. Okay, so enough about Alibaba. Let's move on to Tencent. Uh, Tencent 700. Okay, Tencent. Okay, I drew this one in October, and interestingly enough, it played out quite well. So let's talk about that. So price came down. Let's identify our near term range first. Okay, so it's about 188.4 to about 415. Okay, so this is pretty big. So let's just zoom in a little bit on what is the current news. Okay, let's see here. Okay, so currently what price has done is yes, come up, came down. Okay, so this broke a high. So eventually, if you look at the whole thing, okay, there's a lot of space for it to go down below for 10 cent just based on the charts. But also there's a lot of space for it to return to the higher point. So let's just zoom in on this one. So price came down from a lower low, lower high, retested, came down, lower low, equal highs, and then came down and now it's inside the demand zone. Okay, mouse. Okay, so some time ago I wrote maintain higher lows to test supply of 400, break to test 250 price. Okay, so what this means is, let me just move this out your way. Let's move this here so you can see. Okay, so what this means was at that point in time when I made this analysis, okay, prices were actually here. So what happened was the price came in, consolidated a bit, came up, oh, a new high and a higher low, possible higher low. Okay, so if prices maintain here, it doesn't return down. I'm looking at a little bit of a risky buy-in. So let's say prices, I don't imagine it to come back down here if I'm bullish on this. So we're looking at quite a humble trade of about 1 is to 2.3. Okay, if you are bullish on 10 cent. Current market structure denotes that this demand zone holds and we are moving up to test the supply zone. But if you look, if let's say you are a little bit on the shorter, let's say you're in and out over a few days, one of the things that you might want to take note of is this area here, okay, that forced prices down to break, okay, has not been broken yet. So what this means is until I clear this area, okay, and I successfully manage to hold my price above, I am not testing this area yet. I will not be testing here yet. If you're in a really short-term trader, if not on a slightly longer term, prices will probably come down a little bit and then make its way up. Okay, based on what the chart is showing. Okay, let me move this down here. Okay, so that is it for Tencent. What else I want to say? Oh yes, one more thing that if this demand zone doesn't hold, there's a lot of downside. There's a lot of downside. If you are, if let's say you do your own charts and you analyze, this is actually still in a bearish trend. Yeah. So there is a lot of downside even in the near term. So this is something that you might want to take note of and watch yourself over. Now, Meituan 3690. We get a lot of calls regarding this counter, and if you've been to China and you use Meituan, you will know that they are highly efficient. It's so convenient everywhere. And yeah, let's take a look at the chart. Okay, so let's look at the overall first. Okay, looks to be in a bearish trend, but if we look at the really big picture, if you see this over here, okay, so this is actually a support level. Okay, so what this tells me is in the really long term, okay, right now, if this supply level holds, if it doesn't go any lower than what it is now, then I have so much upside potential available to me. Okay, still inconclusive because I have managed to actually go up already, but let's look at this structure right here. Okay, so price came down. This is one of the support levels. Okay, price came down. Okay, tested this support level, came up. Okay, tried to hold above the supply zone but failed, and then came down to form a lower low. Okay, where is this where all my words are? Let me just remove my words. Just remove this. Just going to move this up here. Okay, so that I don't forget to bring it up later. So price came down from a low, okay, and it's now kind of just hanging out inside the demand zone. And then just today, 28 November, is that today? Yeah, just today price actually came down further. Okay, so this is one of those points where we got to make a decision. Okay, one of the interesting things about this is that currently it looks like this demand zone might not hold. It looks like the price might actually go even lower. Okay, a bit of fundamentals, of course, will play into this. But the interesting thing on the chart is also that if you look at it from a very big perspective, which is here, you are now at one of the best possible buy positions. Okay, because prices have been coming down steadily. Okay, so if let's say I were to be a little bit risky and I enter a trade here, okay, let me just move my chart. Okay, enter a trade here. If I don't believe, let's say, for example, if I don't believe that prices will go down any further, I believe that this support level will hold. I have a lot of upside. The first one being about 1 is to 2.6, the next one being about 1 is to 5, the following one being about 1 is to 8, almost 9, actually. So this is something to take note about Meituan. Let me just get rid of. Okay, our current market structure is still, see the wick over here, current market structure is still holding within the demand. This support level has not been broken yet. Okay, so we are reaching a very pivotal point, the so-called fork in the road. Are you going to dive into Meituan right now and take the risk for the upside, or will you wait for a slightly better position on the lower end? Now, moving on to, oh, okay, we're going to talk about ETFs now. Okay, just give me a moment. Okay, we're going to talk about ETFs now. What was that? Tracker fund, I believe, 2800. The most popular one, 2800 tracker fund of Hong Kong. Okay, I think I drew this quite recently as well. So for tracker fund, our range is as follows: 14.6 to about 22.7. Okay, so tracker fund, the constituents being very, very high weightage. Of like the earlier on, I think Rubin mentioned about HSBC, Tencent, all these counters. So it's pretty popular. Okay, it's a very popular counter. So let's see our range now. Let's first identify what has been going on. Okay, so let's start from here. Okay, price came down, nothing happened. Price came up, retested, and then it broke all the way down. Okay, so this one structure first. Okay, price broke all the way down. Okay, formed the new support level, came up, and then retested. Okay, so let's zoom in a little bit. When prices came down, okay, and it broke back up, okay, there are many different levels on the lower time frame that price have actually broke. Okay, so the last push for this price to break was actually over here, hence the demand zone being over here and being over here. Okay, but I only labeled this one because this is where we are now. So price came up, retested, failed to break, failed to hold, came down, lower low, lower high, lower low, equal high, all these key low, high, lower low, lower high, lower low. So this is the key structure of a bearish trend now. Okay, so but as you can see, it's getting closer together. The highs and lows are getting closer together, so it's kind of consolidating. It is consolidating. It's consolidating at the demand zone. Okay, so let's say I want to play inside this range. Okay, I believe, okay, that if the price manages to hold here and it comes out and gives me a high, okay, then I will be thinking, oh, okay, the consolidation is over. Now it's time for the breakout. So I want to buy that breakout. So even at a riskier level, okay, I will be, oops, you all can't see that. Let me just move it over. Even at a slightly riskier level, I'll be looking at 1 is to 2, 1 is to 4, and finally in this structure, if it comes back to retest, 1 is to 6. So not bad. Not bad for structure from a structure point of view. Okay, so this consolidation is very important. We need to see if this holds. As long as this price holds, this support level is valid, price will go up. Okay, sorry, water first. Time check, huh? Now it's about 5:05. Okay, I wanna wrap it up so that I can take some for everyone. Okay, CSOB Hang Seng Tech Index ETF 3033. Okay, let's see now. Looks like opportunity might have passed. Okay, so let's see, 2.692 to about 5.055. Price came down, price came up, didn't retest. Okay, made a new low, came up, made a new high, made equal low. Okay, so it looks like currently the price is rallying to go higher. Okay, so let's zoom in a little bit. Okay, so we have a double bottom here. So this box was drawn, I think just last week only, I think. Yeah, and prices seem to have held well above this level. Okay, so what we need now is to look at the lower time frame. So I'm going to look at the 1 hour so that I can see this clearly. Okay, we look at the 1 hour. I've already cleared this. I've already cleared this. Okay, and then I'm consolidating one more time. Okay, consolidating one more time. Either here or here. Can only break out in two ways. Okay, so from a larger time frame, I've already cleared. On a lower time frame, I'm consolidating and rallying to go upwards one more time. See, look at this like that instead. So consolidate, break out, consolidate, break out. That's the structure that I'm thinking might happen. So if you're looking into this, let's go back to the 4 hour. If you're looking into this, not a bad time to buy. Of course, this whole chunk, okay, being in the downtrend is fundamentally affected by what has been going on. Uh, don't need to see that. Okay, by what has been going on recently in Hong Kong as well. But you know, like what earlier on in the presentation Rubin was talking about as well, it's good to look for opportunities amidst all this turmoil, so to speak. Okay, so based on this market structure over here, I if I were to buy this, okay, I would probably I'm a bit more conservative than a lot of investors. Okay, so I will actually wait for it to clear maybe this level here, consolidate, and then I'll be like, okay, cool. I can probably buy maybe from about, oops, I can probably get around there. So it's about like maybe 21% up to about 12. So about one is a 1.8, roughly around there. Yeah. So I just do this here, simpler. Yeah, about one is 1.7 ish. That would be my trade. Yeah, and then if let's say price start to go down again, I can always just hold it. Yeah. Okay. So I don't want to talk anymore about the counters that I want. I want to see what everyone else has to say. Oh, okay. You can open an account later. Um, let's see. What counters do we have? Anyone? Now is the time for people. For everyone to, if you know you want to put the counter inside the Q&A section, that would be. I will do your counter.
Let's see if the participant got any counter suggestion.
On the Q&A.
One person
Okay.
suggests the 2828.
Okay, I saw 2828. Okay, let's take a look at 2828. 2828, let's see. Okay, so let's go. Everything is kind of in the red now. So let's look at current market. Oh, this looks very strikingly similar to the other ETFs as well. Okay, I guess it's because of the weightage. So let's just identify our trading range first. Okay, so there's one more level here that I would like to point out. Okay, this is the. Okay, so let's talk about this story first. Okay, price came down, came back up, retested, and then lower low, lower high, lower low. Okay, equal lows, lower high, and then break. Okay, so now after we see that, let's look at where it has been. Okay, so there's one here, roughly somewhere around here. Okay, so let's take a look on the surface level at 2828. Okay, so price came up here, came down, okay, and then there was a rally that pushed the price all the way up to retest. So we're looking at this level here at about 57 to 60, and another one at about 50 to 53. Okay, so let's talk about what's going on right now. Okay, in this level here, prices have returned to the initial push. So if we are going by the logic again, like what I mentioned earlier, the price here will push it upwards. We are now in a demand zone. Okay, so I'm not so sure how long you plan to trade this one, but I'm going to go down to the 4 hours. Okay, maybe 1 hour, 1 hour, 1 hour would be better. Okay, okay, so you can see, oh, okay, so price is basically trading in a very, very small range. Okay, but we have consistent higher lows that seem to be appearing. Okay, so what will what will basically be the case is, let's say the price holds at this level, okay, then I'm expecting a price to break out to retest the higher levels first, okay, of about 66 to 67 before coming back down. Okay, then it will trade in range again, going by historically what has happened, and then push up, and then we'll start testing higher levels over here. So if let's say you are already in on this one, let's say you didn't go in at like $100 or something, let's say you were in at about 60 to $68, around this range over here. Okay, you are directly in the middle of the structure now that is trading in range. So if you're a short-term trader, as long as it holds above the demand zone, you can push it up to prices of about 67, 72, and eventually test the high once more. Although I suspect that if the economy makes a good recovery, we will just blast through this. Okay, let's move on.
What about 2269?
2269,
Biological?
Biologics. Oh, I think they just had a new counter under the same name also, right? But 2269, is it, or 2269?
Correct.
Okay. Okay, 2269. Whoa, okay. Let's see the daily. Okay. So immediately we have a double bottom over here. My mouse is not listening to me. Okay. So we have one level here. Price came up. Okay, break and then came back down. No big deal. Very normal for Hong Kong now. Okay, so we're gonna just mark out simple supply zone where people want to buy. Okay, and then let's look at this side a bit to the left a bit. Hang on, I need to move to the left a bit to see where my other zones are going to be. Price came down, break up, came here. This high breaks this low, so we're looking at this one over here. Okay, so this is the overall higher one. This is our demand. So did I get that upside down? I did. Yeah, sorry. Okay, but my own colors confuse me. Okay. Okay, so supply zone is over there. We'll see biologics. Okay, this one on the daily chart, honestly, is still in its downtrend. Okay, but we have hit an important support level of about 35 to 38. Okay, so we're going to go and zoom in because you can see this level here, go up, come down, go up, come down. Then you see this. This is important because it's a higher high and these are lower highs. So it's not even consolidating, it's just taking a step ladder upwards. Okay, so let me remove all my drawings first and then we'll go even closer. Okay, so what do we see? Let's see. Okay, importantly, on a lower time frame level, okay, we have a high here that was broken. Okay, so price went down, up, came here. Okay, so this whole thing is one movement upwards. Okay, like it doesn't really do anything until about here. So we have a little bit of a supply zone here as well. Okay, sorry, demand zone. Okay, demand, yes. Okay, yeah. Okay, we have a little bit of a demand zone here as well. So if you're on a lower time frame and you're seeing, oh, price came up, came down here. So came down here, broke back up from a higher high. So there is still space here, okay, for price to come down. But what we are looking for on the shorter term, okay, maybe until about maybe March, February to March, is for your price to hold above its current level. Once your price holds above this level, then we are looking at retesting somewhere around maybe 56 to 54. Okay, that's for OC Biologics. So for people who are invested into this one now, okay, if let's say you're already in it at like 40 to 50, okay, what you want is a continuation of your market structure to create new highs. Okay, this will be indicative that, oh, okay, it's recovering. People are wanting to buy more into this product. And let's say if you really want to nitpick a little bit, okay, uh, okay, this is the level that you will have some issues at lah. This is where people who bought here will be looking to get out of. Okay, market will probably retest, and then you want it to hold above this level, and then you have a lot of upside available. Okay, that's it for UC 2269. See. Okay.
This
So,
one, 1211.
Mr. Stephen Chan,
I think-
1211.
I
Let's take a
believe it's
look.
a BYD, right?
BYD, is it? Yeah, BYD. Did I draw for BYD? No, I didn't. Oh, I did. Okay, cool. Okay, BYD. Let's see. I also need to refresh my memory a bit on why I drew this. Here came down, price climb. Okay, okay. So based on the charts, okay, what I can see is that I'm gonna disregard this whole area here first, okay, from the 161 to 194 area and just zoom in onto this bit here, into this whole section here. Okay, when I draw, you all can see, right? Yeah, okay, cool. Okay, so demand zone. Why this is the demand zone? Okay, because price this level here has broken so many of these, okay, and came to an equal high over here. Price came down and then it pushed to break this level. So I also drew quite long ago. I drew it like a few months ago, I think. Good to see that price, the supply zone is holding. Okay, so based on what was drawn last time, okay, price came up, came down, formed a higher high, came up, failed to break. Okay, so I know sometimes it's a bit confusing that let's say you can't see this part. Let's say this whole bit here is you can't see it. How will you know that your investment is going up or not? So this is one of those key structures that you can look out for. When I say price has to hold above or hold below so that you know where it's roughly going, is this price came up immediately within the next few days, you can see this price is not holding in this zone. Okay, so you're not expecting an immediate uptrend. Okay, so of course it will take a few days of looking, or in this case this is about, let's see, about 19 to 24th, so minus the 2 weekend, so about 3 days. Yeah, so to be able to tell that this structure is not holding. Okay, price came down, form a double bottom, came up. Another interesting thing is when the price came up to here, you can see it's not even near, it's nowhere near. Price came up to 251. The price we're looking back is about 253 to 260. Okay, so it's not retesting. And then it comes down, from a higher low, came up, higher high, but immediately comes back down again. Okay, and then this travesty occurred lah. So it comes all the way down here. Now what is more interesting is we have a double bottom. Okay, so just I think Hong Kong market just closed only. Correct, right now it's 5 plus. Yeah, Hong Kong market just closed. So okay, so for today's trading, we have a double bottom. Okay, so now you want to zoom in onto this range. This big range. Oh, don't know what I did. Yeah, this big range over here. Okay, so now this is where the price is playing in. Okay, if you are risky, like a risky trader, like your risk appetite is huge. Okay, like very unlike mine. Let's say your risk appetite is huge, and you're like, okay, I want to buy in here, and then come up to retest the supply zone. This is your time to do it. If you're more conservative like me, I don't really trust that double bottom. Okay, because structure has yet to play out. Because you see, there's only one candle here. There's only one day of trading here. Okay, yeah, I'm not sure whether maybe price come down here and retest. So you have basically two potential entries should this demand zone hold. Okay, one would be here roughly at 218. Another one is if let's say price come down to retest the demand zone about 194. Okay, so this all has a lot of different factors, especially fundamental factors as well. But this is the current market structure you are playing in. Yeah, can you scroll up a bit? Yeah, so Mr. Stephen Chan, I hope I have provided you with some basic information. Okay, now let's see. Can you look at ETF 3067? 3067. Okay, I'm sorry, I think I have to make this the last one. It's iShares
Second.
Asia Trust, is it? iShares Asia Trust. Okay, let's look at the big picture first. Started high, it's okay, most of them are like that. Okay, consolidation. Let's see, so 10.73, 5.7, oops, I used the wrong tool. Let's see, 5.71. Okay, let me just take a look at it for a short while. Okay, we have one level here. This looks heavily in the downtrend, or rather, it looks heavily into consolidation. Okay, so we have one supply zone here, and then this one hard to say for now. Okay, so the story behind this: price came down, price came up, failed to retest, came down. Okay, high, and then one more break here, and then equal low. Oh, okay, actually not so bad. So it's consolidating. So a little area to take note of is probably here. We have a double bottom here. A wrong tool. We have a double bottom here. Okay. So if let's say you are already in, there's still a little bit of downside that is going on. Okay, one level being over here. Sorry, that's a demand zone. Okay, one level being over there, and of course one level being lower, but yeah. So on a very low time frame, okay, let me just show you why I've drawn that there. Okay, on a very low time frame, this is our bottom. Price came up, nothing happened, came down, and then it surged, go past, breaking this level over here. Okay, came down and then formed its new high. That's why this level is significant. Just in case you're wondering why I drew it there, lah. Okay, so on a lower time frame, this is one structure. It's a bit smaller, of course, but just so I know my screen's a bit small, so I just drew it a little bit bigger so everyone can see. Okay, so if you are in this already, price looks like it's hit a support level, an important support level. Okay, but if you're more conservative like me, again, because this is a lower high and an equal low, I do not have any confirmation yet that price is going to break out. Instead, I feel like I personally am more bearish towards it coming back down to retest this level. Yeah. Okay. So I hope that is of some information. What time is it? Okay, 5:20. Okay, I apologize. I'm afraid I have to end the technical analysis session here. Okay. However, let's talk about this first. Okay. If you want to experience the full Poems Mobile Trade community, you can scan the QR code here to open an account. You give you all the benefits from our app. Okay, we are also our dealers here are also pretty high touch. You know, if you have any questions, you can actually call into a hotline. Okay, and actually, you know, I want to leave this on for one more. Again, if you want to open an account, it's as simple as scanning the QR code. Scanning the QR code, opening an account with us. Okay, and you will get the full benefits of P3. And of course, through all our channels, we will inform you of all our webinars that are coming up as well. Now, you can get in touch with us now. I have a little bit of something special here. Okay, as you can see, there's a survey here. Okay, we're always trying to do better, get better, and more suitable for our clients' needs. So we have a simple survey. It's a simple satisfaction survey. But okay, Another perk of opening a poems account with us is that you can enjoy benefits such as this. So for all of our viewers who are poems account holders, for the first 20 people who complete our survey, you don't even have to write a very positive survey if you didn't really like it, but I hope you did. Okay, we put in effort into all this. You will get free Hong Kong mobile live price if you put in your poems account number. This is something special that we are going to try and implement every time we host some of these webinars. Okay, so again, fill out the survey. It helps us get better. It helps us be more suitable for you. And Rubin and myself, we are from the Asian Markets Dealing team. You can see on the right side, talk to global markets at phillip.com.sg. If you have any questions, you can either email a reminder if you're a client or a potential client. Okay, my favorite group of people. You can always drop us an email here, and wherever possible, as much as possible, we will try and attend to what that you need. And if you're already a client, just a reminder, US, Europe, Canada dealing questions, you can also refer it to Global Night at phillip.com.sg. We're all part of the same department. They're also having a webinar actually. So the person who taught me technical analysis is actually going to host some webinar, so you don't want to miss that either. Okay, so again, the survey QR code is here. It would be wonderful to have some feedback from everyone. If not, just a short disclaimer. And thank you very much for coming to the Global Markets monthly webinar. I hope to see everyone every month. I took a short break from webinars for a while, but it's been great to be back. So thank you everyone for coming. I'm just going to put up the survey again, and we're going to end the webinar here. Thank you.